All right, what's going on, guys? Market review today for August 8th, Thursday, 2024. Starting off here on Nasdaq daily chart. As you can see, having a bit of an outside day, taking out yesterday's low and yesterday's high. If you take consequent encroachment, midpoint of this wick, draw it through, you can see we open on this candle with today's trading. Traded down, taking out the sell side, rallying up, clearing out the buy side. I have two new day opening gaps here. Okay, this is actually a new week opening gap where we close on Friday and open with Sunday's trading. This is a new week opening gap. And I have an old new day opening gap down here between Tuesday and Wednesday's trading. So we're going to look at all the price action that occurred in between these two new day opening gaps here. So let's drop down to a 15-minute chart. All right. Down here, you can see that consequent encroachment of the wick on the daily time frame. We drop down, take out yesterday's low, rally, consolidate. Okay, we had high impact news driver, I believe, at 8:30, which is this candle here. Displacement above the new day opening gap. Drop down, fair value gap here. About consequent encroachment of the BISI and consequent encroachment of the new day opening gap, leaving the lower half of this buy side imbalance, sell side inefficiency open. Okay, if we're bullish and looking for higher prices, you want to see the lower half of fair value gap stay open. We see that beautifully here. Also, fair value gap over here, that's an inversion fair value gap. Notice how it was used as resistance here and here. We sell off, come back to it. Below this inversion fair value gap, look at the bodies respecting it. Okay, the bodies stop at the inversion fair value gap and at the high of this buy side imbalance, sell side inefficiency, but the wicks trading down into the new day opening gap, into the consequent encroachment of both the fair value gap and the new day opening gap. Rally up, fair value gap, breakaway gap stays open. This fair value gap here, the lower half stays open. That's what we like to see for higher prices. Trading up into that new week opening gap. These highs up here, too clean, too smooth. Tagging that there. All right. Bullish order block, two consecutive down close candles paired with a fair value gap. That's a high probability order block. Trading into it there. Clearing out the buy side, equal highs up here and equal highs up here. Yesterday's high. All right. Let's drop down to the 5-minute, get a little bit more detail here. Again, taking out yesterday's low. Consequent encroachment of that wick on the daily time frame. You can see the precision there. Fair value gap from our 8:30 news driver, trading down. Consequent encroachment of the new day opening gap. We rally. These consecutive down close candles here, these 4 consecutive candles, that creates one bullish order block. Okay, take the high of that, draw it through. We open on this candle, trade down into the order block. Trade back up. We rally, small little fair value gap in here as we head into lunch. Rally again, balanced price range. Zoom in a little bit. This fair value gap here, single pass down. This fair value gap here, single pass up. That portion is balanced. Look at the bodies. Rally up, consequent encroachment. Look at the bodies of the new week opening gap. Trade down, balanced price range. Rally up, trade down, taking out this low. Classic signature during the lunch hour. We'll look at that on the 1-minute time frame. Balanced price range, beautifully, perfectly delivered. Rally up to the high of the new week opening gap. Just fall short of yesterday's high, but we did take out buy side above this high here. So if we zoom in, we have the buy side resting above this high, but we also have this high up here. So just for reference, tagging that there. You can see the body stopping. We retrace, and during the final hour of trading, 3:15 and 3:45, you'll see that there's a setup taking out the clean highs here, and then yesterday's high. All right. Let's go down to 1 minute. I didn't take any trades today in the live stream. I wasn't interested in any of this price action going higher. Fair value gap, again, 8:30 news driver. We trade down. Consequent encroachment of that consequent encroachment of the new day opening gap. Okay, stops price from going lower, leaving majority of this fair value gap open. That's what we like to see for higher prices. We have a breaker. We have a low, high, lower low. Take the high, draw it through. The closing and opening prices of these two candles here is the exact same price level as this high that forms the breaker. We drop down, okay, the bodies tell the story, but the wicks do the damage. Okay, we're wicking through the fair value gap, down close candle, bullish order block, but the bodies are stopping at the high of the breaker. We rally up, come back down, order block, trading into it there, rally up again, 2 consecutive down close candles, bullish order block, draw it through, trading into it there, rally up, tapping the low of the new week opening gap, consolidate as we head into the London close. Okay, consolidate some more as we head into the lunch hour. We get to lunch, clearing out the buy side above this high, break down, fair value gap. Fair value gap here, SIBI, trading up into it there, breaking down. Okay, just falling short of the sell side. We rally up, come back down, taking out this low. So what is our draw on liquidity? Yesterday's daily high. Okay, if we're expecting higher prices going into the PM session, what do we want to see occur during lunch? Some side of run on sell stops. We want to see a short-term low taken out before a continuation higher. We see that right here. Sell side liquidity taken out. Okay, so traders who wanted to go long, capture longs, they're taken out of the market. Then we start to rally. Balanced price range. I'm going to take this off so we can see a little better. This single pass down with this fair value gap here. Draw it through. Single pass up. That's balance, okay? And it's also a inversion fair value gap. You can see price stopping near consequent encroachment. We rally, leaving this fair value gap here open, this BISI. That's signs of bullish order flow. Leaving this fair value gap open, that's bullish order flow. Leaving this fair value gap down here open, that's bullish order flow. Whoops. Trading to the high of the new week opening gap, consolidating near that level. Okay, we rally up, we fall just short of yesterday's high, but remember, we did have that buy side about right there. Okay, tagging that, we break lower. Fair value gap, break lower, fair value gap, break lower. Now, as we head into the final hour of trading, 3:15 and 3:45, where is the liquidity resting? Okay, we've already ran a bunch of sell side. These lows here, taken out. This low here, taken out. This low here, taken out. Sell side, taken out. Where is it too smooth? These highs up here. Way too clean. And if you look, I'm going to take this off. We have like a triple top here. That's way too smooth. Okay, during that final hour trading, okay, the market, the algorithm will look to seek attack areas that are just way too clean. So if we have yesterday's high as our draw on liquidity, okay, we're in close proximity to that, and we've already taken out a bunch of sell side. What is reasonable? What can we reasonably expect? We'll look at all this right here. Just way too clean, right? Retail traders seeing this as strong resistance here, come back, resistance, resistance, right? Last hour trading, drop down, sweeping out the sell side, rally up, inversion fair value gap, trading into it here. Also have fair value gaps here. This will be cleaner on like a 2-minute chart or a 3-minute chart. It will combine all these small inefficiencies into one fair value gap. But trading into it here, taking out sell side again here, dropping down, taking out sell side again. So taking out a lot of lows, and these highs here, way too smooth. Look at the bodies. We rally up, clearing out these equal highs here. But ultimately, that daily high that we outlined on the daily chart, yesterday's high. Right there. And that's it. Tomorrow, last trading day of the week, we'll be live trading in the Discord. Tune in, join the Discord. Okay, if you're not in there already, okay, you don't have to be a paid member if you don't want to. There is general admission. Hop in the chat room, chat it up with us. We're sharing charts, getting better every day, which is the goal. And it's a lot of fun. Webinar tomorrow at 10 a.m. Eastern time for those with access. Okay, we're going over some Power of 3 stuff. We're going to do a weekly review, talk about the setups that formed, and how we could catch them going into next week. So love y'all. I'll see you all in the live stream tomorrow at 9:30. Peace.
you.